Welcome everybody, and thanks for taking the time to hear an update on Westhaven, and those that are new to the story to be introduced to what we're doing with Westhaven and our Spence's Bridge Gold Belt projects. We are just in the process of closing a transformational agreement with Dundee Corporation that is going to see Dundee invest the next $85 million in evaluation and exploration expenditures on our properties in the Spence's Bridge Gold Belt. That's going to allow us to advance the development opportunity that we have on the deposits that Westhaven has defined at our Shovel Nose property through pre-feasibility, feasibility, and into construction in this cycle. And at the same time, we're going to be able to conduct meaningful exploration on the exploration opportunities that we see at Shovel Nose and our other properties in the belt to realize on what we believe is going to become a multi-deposit, multi-generational mining camp in southern British Columbia, in an area with excellent infrastructure, transportation infrastructure advantages, power infrastructure advantages, and with the combined teams, we have the financial capacity to do that and the technical capacity to do it well. Just a quick snapshot on Westhaven. So we're listed on the Venture Exchange. We have a really strong stable of shareholders. Insiders own over 16% of the company. I think it's worth pointing out the company's been around for 15 years, so that level of investment from insiders means continual investment in the projects, and as the company has advanced on its discoveries in the Spence's Bridge Belt, it's not cheap seed stock from just putting a deal together. This has been around for a while. We're serious about developing this project. Importantly, as we go through, I'll take you through the opportunity and then the Dundee deal, but just to keep in mind, our share capital right now, it is what it is. We have $3.5 million in the bank. We have $6.5 million of warrants that are in the money. We're starting to see those warrants come in. We will not be going back to the market. If the Dundee arrangement goes the way we expect it to go, we are not going to be going back to market again until we're getting project financing to fund our 40% share of the construction costs to build the mine. So the idea of additional dilutive financings has been taken off the table with this arrangement. So just where the properties are located, where Shovel Nose, as I mentioned, is the main project in the south end of the belt. It's where the three deposits that are the development opportunity that we have are located. They sit right on the Coquihalla Highway, so everyone who's driven from Vancouver up into Kelowna or Kamloops have driven by and over our mineral claims. It's the cold water exit on the Coquihalla Highway. There's a power transmission line there. This is a region, when I started this role as CEO less than a year ago, pretty quickly became aware that when I'd say we have this gold project in BC, people say, oh great, well where in the Golden Triangle is it? This is not the Golden Triangle. We're in southern British Columbia, but it's an area with a history of mining and an endowment, a mineral endowment that rivals what we see in the Golden Triangle. The Highland Valley copper mine is in this region. Hud Bay and Copper Mountain is in this area. New Gold, the New Afton mine. This area has a long history of mining. There's a number of deposits and development stage projects like we have, but we just don't have the infrastructure challenges you get in the northern part of the provinces, which means that we have a lower cost of exploration and development, as we'll see in the PEA results. So this is just an oblique view of Shovel Nose looking north. You can see the Coquihalla Highway clipping the north part of the property. That red box is where the bulk of our work has been done. Over 92% of the drilling has been completed in that area. And that's where the three main deposits have been discovered. So these are low sulfidation epithermal gold deposits, high grade. The diluted grade in the PEA is 5.2 grams per ton. If you want to think about this style of mineralization, sort of the gold standard in the world right now would be Lundin Gold and Fruta del Norte. That's the style of mineralization here. So as I mentioned, it is high grade. It's unusual in Canada. We're used to orogenic, Archean, high-grade, narrow-type deposits. This is very different. And that, again, gets reflected in the ultimate economics from the PEA, which was released last March. Was done at a $2,400 gold price, $28 silver. At those prices, a $450 million net present value at a 6% discount rate, over a 40% internal rate of return, 2-year payback, 11-year mine life, producing 56,000 ounces of gold a year. I think the important numbers on this slide, under $200 million as the initial capital cost to get this mine into production. So that is low. And our all-in sustaining cost is well under $900 US an ounce, which means this is a margin story. As mentioned, we're with that production profile, In these deposits, the resource holds together very well. The average mining width in the south zone is between 15 and over 30 meters wide. Underground mining, so lower footprint, lower impact, and underground mining on this style of deposit is actually the cheapest way to mine it as well. It would be more expensive to mine it with an open pit. This deposit and this mine would realize between 80 and 100 million dollars Canadian after tax every year, so over those 11-year mine life. And this is a point that we tried to get across when looking at our peers in the development space, a lot of whom in the Canadian context, we want to get to 100,000 ounces a year. You've got a real Canadian project once you get there. We're producing 56,000 ounces on this development story, and that works because of the margin we have. So this slide is looking at, we think, a proper metric, which is your after-tax cash flow per ounce, your annual after-tax cash flow per ounce, and it compares very well when we look at some of the better-known, higher-valued peers that are producing at that 100,000 ounce a year threshold. And I think Newfound Gold and the Queensway project is a really good example. It's 100,000 ounces a year of production. Its after-tax cash flow per ounce produced is not quite, but almost half of what ours would be. So basically saying that our annual cash flow from those two projects is identical, between 80 and 100 million bucks a year in the studies that were released. That's the development opportunity. We also have a tremendous exploration upside. Epithermal deposits typically evolve in a way where you find the first deposits, you find the first million ounces, and then with time and good exploration work, you get to realize on what the total picture is. Fellow Fraser McCorkadale is helping us. He was the exploration manager for Newmont globally for 12 years, and his best example is Gosowong, where they found 1 million ounces in 1994. They put it in production, and then it wasn't until 10 years later that they found the next 4 million ounces about a kilometer away. That's how these projects evolve. So we've worked hard over the last year to come up with a proper exploration model, looking at the structural setting. We have a really good handle on that, looking at the pathfinder elements and the clay alteration that we see, in particular around the South Zone deposit, which is a fully preserved epithermal system. It hosts 750,000 ounces of gold in the resource. There are more of these to be found. On the right-hand slide here, what we see is antimony over the entire extent of the Shovel Nose property, so well away from the known deposits. There is clearly evidence of the right structural setting and the right pathfinders and pathfinder elements that we want to see elsewhere on Shovel Nose. And when we step back at the belt scale, this gets back to my comment about developing a mining camp here. We have 4 projects that cover 100 kilometers of strike extent of this belt. We have found gold-bearing epithermal quartz veins over a 75-kilometer extent of that belt. We found sinter another 10 kilometers away down to the north, to the southeast rather. This is a belt that has not had the investment and a platform to invest properly in exploration as well as the development stage, and that's where our agreement with Dundee really comes in. So Dundee is going to invest up to the next $85 million. They can earn a 60% interest in the projects by doing that. For Westhaven, flipping that around, retaining 40% was a really important metric for us, and that speaks to the background of the people involved. Our history is with Aber Resources. For those that remember, Aber did really well, and Aber shareholders did really well owning a 40% interest in the Diavik diamond mine. It became a real diamond mining company on a global scale. We retain total flexibility to transact corporately with our 40%. We're not handcuffed in any way, which is often something that bigger gold mining companies bring in. Dundee has committed to spending, guaranteed, the next $30 million on the property. That will see us comfortably through pre-feasibility and significant exploration expenditures. So we're looking at a budget for 2026 on the order of $20 million. The way we picture that evolving, we'll max out at 4 drills on the property. 2 of those drills are going to do infill drilling and geotech drilling to support a pre-feasibility study that we look to complete around this time next year. And then the other 2 drills are going to be drilling exploration targets on the Shovel Nose property. So we're not going into sort of that death valley of studies and there's no news. We're going to have significant exploration drill results to report over the year, and we're fully permitted to be able to do this work. The expenditures from Dundee are staged, but they are funded and able to fund the full $85 million right now and are willing to do it. This is, we'll say aggressively, but it's going to be proper expenditures, because a key thing was an alignment of the groups. When Dundee approached us and we started talking, we went to site, did our technical due diligence, it became obvious really quickly that there's a real comfort level, a real alignment in the view of both groups on how this this opportunity should evolve, getting the resources that we have right now into construction in this cycle, and at the same time conducting the exploration we need to do to find new discoveries and make this a true mining camp, which is what we picture doing going forward. So WHN, a lot to go through. We're in booth 809, so please feel free to come by and get some more of the details. But I'd just say on the retail side, a key thing here is that we're not going to market again until we're raising money to build a mine.